Hi guys, my name is Hars. And if someone asks you that what is a good share to invest in for long term, can you advise me some share? What will be your reply? Of course, shares like Reliance, Wipro, L&T, you will definitely earn for the long term. Right? Right? But then I thought that people like Warren Buffett and Rakesh Jhunjhunwala don't reach that level by investing in shares that all of us do. So what is the thing they do differently? Warren Buffett and Rakesh Jhunjhunwala invest in multi-baggers. Yes, a multi-bagger. Now a multi-bagger is a share that in 5 to 10 years gives you 1000% rate of return and 10 times the profit. So basically a multi-bagger is a company that from zero becomes the next Reliance or the next Wipro. Let me give you an example. Like Coca-Cola in 1920 was at $19. And if I had bought that share and reinvested all the money, all the dividend, or reinvested all the dividends into that share, I would have a net worth of $5 million today. Coca-Cola is Warren Buffett's multi-bagger. So the only difference between a successful investor and a normal investor is that a successful one invests in multi-bagger. So today I am going to tell you how to spot your multi-bagger. I'll have 4 points and every point will have a sub point. All set? Let's go. Number 1. Identifying a multi-bagger. Sub point number 1. Don't look for multi-baggers. In this, the only advice I can give you is that don't enter the markets thinking that yes, today I'll buy a multi-bagger. Yes. No. Because that will never work. I would recommend you to go old school. Old school with your studies of your fundamental research and growth prospects of the industry or the said company. And if you do this, trust me, out of 5 shares you buy, at least 3 will definitely be multi-baggers. Support number 2. Don't look for profits, look for sources of profits. Most of us have a tendency that if the current profits or the current sales are not good enough, we get scared. But what I am telling you is that don't focus on these matters. Focus on the sources of profits. Focus that will an industry or a company have a growth prospect in the coming long term or the medium term? Focus on the sources of profits, not the profits. Support number 3. Promoter shareholding. Now this is another very important factor, because if you are a promoter and you have faith in your company, you will definitely have the majority of the shares. So if the promoter holding is above 75%, then it is a very, very positive sign for the company. Support number 4. No large cap, no small cap, only value. Now this is a very debatable topic that many analysts and many investors keep on arguing that large cap is better. Some argue no, that mid cap is better. Some argue small cap is better. But I want you to forget everything. I want you to focus on value. If the company has value, buy it. If the company doesn't have value, don't buy it. Point number 2. Buying a stock at right time. Now companies like Reliance, Wipro, Lupin Labs, L&T were all multi-baggers, but now give normal returns. So the key is to spot these kinds of shares. And the even more important thing is to spot them at the right time. Support number 1. Find the industry in early life. Here, we have the job to find an industry with actual growth prospects to it, or an industry which is going to experience a positive change. And we have to find this before the media's attention. Because once it gets the media attention, it's too late. Support number 2, companies. Now we've chosen the industry. Now our second point is to choose at least 3 companies in it with the best of fundamentals. And the PE ratio, the price earning ratio of those companies should be ideally less than 10. Because if the PE ratio is less than 10, it shows a very good sign. Subpoint number 3, problem in growth. Now no company in the world can give you profits every quarter. Even the biggest companies slow down, right? So don't be scared if your company slow down. You need to be sure about that the underlying economic factor, that the economic reason because of which you bought the share is still safe. And if that economic factor is safe and unchanged, then trust me, it's good that the share has gone down. You will get the share at a more discounted price. Point number 3, holding the stock. Now I want to quote Warren Buffett. Warren Buffett said that our favorite holding period is forever. Our favorite holding period is forever. And that line says everything. In this, I don't want you to worry about macroeconomic indicators. No. Because honestly, these are things that most of us don't understand and none of us can do anything about. So it's better to focus our energy on something that is useful to us. Focus your energy on the growth prospects of the business. Focus your energy on the business, that if the business will do well or not. And just hold the stock. Because patience is the name of the game, my friend. I have one word of caution. That this type of investing is not for investors who will want to invest in markets for only 1 to 2 years or have a low risk appetite. This type of investing is for investors with a high risk appetite and a long term eye. I like to end with a quote that multi-baggers and finding multi-baggers does not need skill, it needs an attitude. I hope this has helped you. I hope to see you next time. Please like and subscribe. Thank you so much.